welcome to Business Incorporated live on Channels Television, where we'll be tracking the markets, the economy, and of course, we'll see how all that affects your pockets. And here are the stories that set your agenda. UAE to accelerate oil pipeline project to help bypass Strait of Hormuz. And Kenya raises fuel prices amid global oil shock linked to Iran conflict. And Zambia eases sulfuric acid export ban to Congo. I'm glad to have you join us for this half hour. I'm Will Ibong. As always, let's get a check-in on commodities market. We begin with the metal space and see how they fared today, seeing that all prices rose. We see spot gold was down, all of them in the red. Spot gold down 2.68%. Spot silver also down, platinum, palladium, copper, all in the red. The high outlier is the spot silver down more than 7%, 7.6% at $78.80. Let's look at oil now and see how they performed, especially after the meeting between President Donald Trump and Xi Jinping. We can tell you that all prices are rising. We see Brent crude up 2.66% at $108.53 a barrel. WTI crude also in the green, $104.43 a barrel. Natural gas also in the uptrend, 0.93% at $2.92. Now, Abu Dhabi, as I mentioned earlier, UAE is accelerating construction of a second west-east oil pipeline to Fujairah as it seeks to expand export capacity and bypass the Strait of Hormuz. The project is expected to come online in 2027. It will double ADNOC's oil export capacity and strengthen the UAE's ability to route crude shipments outside the strategic waterway. The second pipeline project comes as global energy supplies remain under pressure and flows through the Strait of Hormuz remains severely disrupted amid the Iran conflict. Repeated attacks on energy infrastructure and shipping have also affected the UAE's ability to restore normal output levels. More on what's happening in the oil space. Let's look at Nigeria. Crude oil output for the month of April is now nearing its OPEC production quota based on the latest figures. Now, this comes at a time when global supply dynamics remain in focus. For more insights on what this means for Nigeria and the wider market, I'm joined by the Vice President of the African Energy Council, Chinan Dikwa. It's good to have you join us, Chinan.
Hi, Will, pleasure to be here. Good to see you.
Yeah, Chinan, Nigeria is now at about 1.49 million barrels per day. That's close to 99% of its OPEC quota. Is this a sustained recovery or just a short-term fluctuation around capacity limits, because we've been seeing that ping-pong movement?
Absolutely. Will, thanks for having me. I like how you put it there. I think it's a very kind way to put it, to say it's 99% of its quota. Yes, you're 100% right. Nigeria's quota is 1.5 million barrels per day, and on this occasion, we went very close to it, 1.48 million barrels per day. So we're only about approximately 11,000 barrels short. But I think the devil is in the detail. If you consider that the month before we missed quota, and the month before, and the month before, and the month before, going back for about 9 months we've been missing quota, then I think it paints a completely different story. I completely agree that many people would say we came really close, and I think that's a silver lining in there. But without a doubt, I think the big story is we've not been able to broach or hit that 1.5 million barrels per day, which certainly suggests that our problems are more structural than volatility. And I think that's where we should focus. You know, we need to see what is it that we can do in the short term to start to consistently produce above 1.5 million barrels per day.
And so what is that specific bottleneck that you think is preventing Nigeria from consistently hitting or holding the 1.5 million barrels per day that we are targeting?
Yeah, I think there are several things that have kind of plagued us. In the past, we made the argument around oil theft, and it was a big thing. Now, there's no doubt that Operation Desert Storm and the other ones have really curbed that to very low levels. We've seen Tantita really score a lot of gains. So Tantita is the company, you know, with the oil pipeline oil contracts, and they've really scored a lot of gains. But still, I think there are still leakages around that. From the data that we can see, lots of production. When it gets into the terminals, there's still a mismatch between what was, sort of produced and what reaches the terminal. So there's a few leakages there. But I think beyond that, it's also a thing of the overall strategy. There are a few wells that have been shut in, I think, over the last couple of years that have not been able to be brought back into production. So NUPRC needs to look at these wells very especially to see if those can be brought up, very quickly. But I think the real silver lining here is, do not forget, we've seen a couple of FIDs come on stream. We've seen several last year. Of course, these are big projects which will not come on stream today. I think in the next 18 months, 2 years, 3 years, we should start to see those new barrels come onto the market.
So this is the first time, like in a couple of months, that we've actually surpassed the 1.4 million barrels. We've hit higher and closer to 1.5. What do you think is that single biggest risk that could push us back outputs below 1.4 million barrels per day?
I think, so just for context, always remember, most of the other OPEC members produce at capacity. Most of them. Most of them produce at capacity. UAE, is producing approximately 3.5, you can argue, million barrels per day. Of course, the UAE is out of OPEC right now, but it used to produce there, and it had a huge amount of spare capacity. So it always exceed that quota, producing that quota. And several of the other, members are that way. I think what we should be doing is not focusing on how close we've come. We should be focusing on producing at 1.5 million barrels per day so that can give us the leverage to go to OPEC and ask for an increase in quota. Don't forget, Nigeria has been asking. We have been asking OPEC to increase the production quota, and OPEC has looked the other way. And of course they would. Of course they would, because we have paper capacity. What Nigeria has, with all due respect, is paper capacity. We've been given 1.5 million barrels per day. We've been unable to satisfy that. So I don't see how that quota can be increased. Now, I'm going to say this. It's 1.48 million barrels per day of pure play crude oil. If you put condensate on there, then we're approximately 1.69 million barrels per day, okay? And yes, that changes the game, but don't forget, condensate is not added as part of OPEC quota. But I think actually, Will, the biggest question is not really the OPEC miss, the OPEC gap. The biggest question, or the biggest thing to focus on, is actually the fiscal gap. We do have a massive fiscal gap. Based on the 2026 budget, we should be producing approximately 1.84 million barrels per day. Even if I put condensate on there, like I just said to you, we're approximately 1.69. So there's still a big shortfall there in terms of production. Okay, and when you look at price, I think we've been extremely lucky with price. The budget price for 2026 was $64.8 dollars per barrel. Today, at this instant, actually, spot price approximately $108 per barrel. So the fiscal gap, I think, is what makes me much more worried, because it has a huge impact on our foreign exchange. It has a huge impact on inflation, energy prices, and all of that.
Definitely, revenue loss is something of a concern for many Nigerians, especially what has to do with oil. But we do know in the news, OPEC Plus is announcing, a gradual quota increase to fully restore earlier production. That's about 1.65 million barrels per day, and that's supposed to start in September. But with this level of compliance that we see with Nigeria, does it, the 1.4, 1.3 million barrels per day that we're hitting, and the 1.5 million barrels per day target that OPEC has set for Nigeria, doesn't really reflect Nigeria's real production reality? Or is it now becoming more symbolic than practical for them to set that 1.5 million barrels for Nigeria?
Well, in terms of Nigeria, so if you go back to around, I think, 2005, or probably just after, Nigeria was producing crude oil at 2.5 million barrels per day. 2.5 million barrels per day. Now, if I go back at the same time to talk about the UAE, I think, was at par at the time. Right now, over the last few years, the UAE has gone way, way, way above that. In fact, they have more spare capacity. So they were probably at par with us. They've gone way the other way. We have come down progressively over the time period. So you asked me the question: do we have the capacity to produce crude oil at where we are right now, 1.5 million barrels per day? Actually, I would say we have the technical capacity, technical capability to produce at a minimum 2 million barrels per day of crude oil. Where we falter, I think, is the core strategy of achieving that. Where we falter is sort of the consecutive plan of looking at, the quick wins. So I'll say this very clearly. We have Bonga North, okay, that's coming out. We have Bonga Southwest that's coming out, and a few other FIDs that we have seen that are coming up. All of those will put additional barrels onto the market. So I'm a lot more confident 2 years from now, 3 years from now, that I am right now. But if I were NUPRC, what I'll be focusing on is our short cycle barrels. There are several fields that are in shallow water Nigeria, just shallow water, where you can take those barrels and quickly tie them back. So short subsea tiebacks from shallow water fields into existing production assets. These are short cycle barrels because you can bring it on stream probably in a year, maybe a year and a half, very, very quickly. And the production could be quite substantial, maybe 20,000 barrels per day, 30,000 barrels per day. But all of this add up, into our overall production. So I think the focus needs to be, yes, on big investments like we've seen in Bonga, North and Southwest and Apparel, but I think also in short cycle barrels, because at times like this, those short cycle barrels become the most strategic and the most important.
When we talk about the wins that we could have when looking at OPEC's policies, are you implying that OPEC's policy is now technically out of sync with ground realities in Nigeria? Is that what you're saying?
Not at all, Will. I think, the way to look at OPEC right now is UAE was a super important player. The UAE, if you ask me, was probably the second most important player in OPEC. There's no question about that. And I'm saying this because, yes, the UAE is third in terms of overall production. So if you look at OPEC itself, you'd say Saudi Arabia, tops, and maybe you can argue about Iran. So Iran, obviously, under sanction, yes, and other countries. But UAE was certainly number 3. But when you look at it in terms of spare capacity, Will, and I think that's the real game, the importance of OPEC and the charter of OPEC prioritizes countries who have spare capacity, because the role of OPEC is to play the role of market balancer. They would look at production and say, okay, production is too high, let's cut production. Production is too low, let's put additional barrels onto the market. That can only happen, and you can only be relevant in OPEC if you have spare capacity. In Nigeria, we do not have spare capacity. We have not hit 1.5 million barrels per day. So we don't have spare capacity at all. The UAE had that. It had significant headroom, and it would play with Saudi Arabia. I think it had approximately 1 million barrels per day of spare capacity, and Saudi Arabia had, I think approximately 2 or 2.5 million barrels per day of spare capacity that it could use. Those guys, had they had the leverage to negotiate in OPEC, but also, to balance the market. So with the exit of the UAE, OPEC is without a doubt weakened. OPEC is weakened, there's no question about that. But is it relevant? Of course it's still relevant. OPEC is still relevant. It controls at least 40% of overall market share in terms of crude oil production. So it's very relevant. But the question there, is it archaic for Nigeria? I don't think it's archaic for Nigeria. I think Nigeria is not at the point right now where it can, start to look to get out of OPEC, because I don't see where the benefit of that would be. We're not producing at the quota. We don't have spare production capacity that we're being limited from producing, like UAE. The UAE had approximately 1 million barrels per day spare capacity. They could not utilize it a lot because of, the market conditions. But Nigeria does not have that. I think Nigeria needs to stay in OPEC, mature its oil and gas industry, build capacity in terms of spare capacity, and then have the conversation to have that increase in the long run.
So it's fair to say that if nothing changes structurally, Nigeria may remain permanently near quota and not comfortably above it. Is that what you're saying?
Yeah, I think I think for without a doubt, in the short term, I think the devil for me would be, I want to see the May numbers, and I want to come back here and we can review that together. Let's look at the May numbers. If the May numbers start to show another structural decline, we're 1.48 million barrels per day. If in May we go the other way down, then I think I would worry a lot. But if we could hit 1.5, then that gives me a lot of comfort. Don't forget, Will, I just said for the last 9 months, we have not hit 1.5. So if we broach that in May, then that tells me that there is momentum and the reforms are starting to kick in. And I think as we go towards the end of the year, we should have a few, as far as my conversations with, a few of the players in NUPRC, I do think that there are a few barrels that should come onto the market towards the end of the year. And I think as we progress forward, then we should start to see some of those large FIDs coming in. But in the short term, we'd have to see what the numbers come out in May, June, July, I'd say.
Well, keep an eye on that. But let's look at the global oil price performance for this week. It's been trading around the range of about $100 to $108 per barrel. And the latest reported levels, Brent's about $108, WTI about $104, $103. What, in your opinion, apart from what we're seeing between the meeting between President Trump and Chinese President, what is actually doing more of the price setting right now for oil?
Without a doubt, Will, what is dominating prices? And I'll tell you this: analysts like myself and many, around the world are really shocked actually that oil is still sort of at the low levels where it is, just given everything in the geopolitical space. We've had real damage, permanent damage to oil and gas assets and facilities. The price of oil went approximately $126 per barrel, came down. We've had real disruptions in the Middle East, and it's gone up and down. Many analysts, including myself, called for $150 oil, $200 oil, and logically so. But I'll tell you this, Will, the reason why it hasn't gone to those levels, and this is what we're finding now, is many countries, many traders elected not to go and purchase crude oil on the markets, even with all of the things that are happening. A lot of countries were drawing down from their strategic petroleum reserves. China was doing that. India was doing that. Japan was doing that. They were drawing from existing reserves that they had stored onto the market for a long time, because the bet that many countries had was that the war would be somewhat temporary. We'll get a quick resolution over after a couple of months, and then at that point, they can go back onto the markets to purchase crude at decent prices. Now, I'll tell you this. We've now been going to this war, for a fair few weeks now.
Okay.
And honestly, the drawdown to those reserves is starting to become very material. Some of the numbers we're seeing, people are suggesting right now, if it goes up for the next few weeks, it's very possible that the price of crude oil will start to tick back up very substantially.
Definitely.
So we have had that reprieve of pulling from strategic reserves. Strategic reserves are going down. I think the price could go up as the war carries on.
Okay, we'll see how that goes. Thank you so much, Chinan Dikwo, Vice Chairman, African Energy Council, for your thoughts on business incorporated. Always good to have you.
Thank you.
Let's look at what's happening more in Africa, especially with the trickle-in from the Iran war. We see Kenya has increased retail fuel prices, citing rising global crude oil costs linked to the ongoing conflict involving Iran. Now, the Energy and Petroleum Regulatory Authority says the adjustment reflects higher import costs as the global oil markets remain under pressure from supply disruptions. Now, diesel and petrol prices have been seeing the biggest increases. Now, moving on, we see Zambia's eased restrictions on sulfuric acid exports to the Democratic Republic of Congo after domestic stocks recovered, allowing selected producers to resume limited shipments. And the government says 2 copper producers have been cleared to export the chemical, which is a key input in copper and cobalt extraction across the region. And let's see what's happening in the markets now. Looking at NGX, we see that in negative territory after yesterday's negative close, still negative sentiments there, 0.00%. That's flat. 252,000, still holding on to that level. And we see the GSE in South Africa down 1.66%. That's probably responding to oil prices rising. Let's see the EGX, which is closed yesterday, but we see it closed in the red, 0.49%, and Kenya closing in the red yesterday is more than about 0.5%. And let's look at major equities in the Gulf. Most of them were closed, but we see UAE trading, and we see they were in the red at intraday, 0.54%, and Abu Dhabi also down 0.59%. Tadawul and the Qatari indexes were closed yesterday, but we see that the Qatari index was the one that closed in a green, 0.2%. Now moving on to U.S. futures, we see that fell on Friday after talks between President Donald Trump and Chinese President Xi Jinping ended without major policy breakthroughs. The Dow futures lost 0.6%, S&P 500 0.74%, Nasdaq futures down 1.1%. And now, although both leaders agreed that the Strait of Hormuz must remain open, investors appeared disappointed by the lack of major trade or economic announcements from from the summit. Market sentiment was also weighed down by concerns that the meeting produced limited concrete outcomes for U.S. companies and global trade. Now let's look at Asia markets. South Korea's Kospi, that fell more than 6%, 6.12%, and this is coming reversing gains and retreating. Thus, we see down gains from Samsung, people profit taking from that. That's heavyweight giants drew that market down. Nikkei is also down in that region. Hang Seng in China is also down, same as we see China, the Shanghai in mainland China, and in India, the market is also down. So much red flowing out of there. But for a look at what's happening in the EU markets, I'm joined by Lars Alter in Berlin. Lars, can you break it down for us? What's happening in the EU markets right now?
Yes, of course, Will, and it's good to be with you. European markets just as red as the Asian and U.S. markets that you were just showing us. All the indices here pretty deep down, about 2%. But it's obviously not a big surprise. If there was any strength in markets in recent days, it obviously came from the hope some investors had for those Trump-Xi talks in China, and you just mentioned it. The summit is over now, and not much was accomplished, especially not when it comes to Iran and specifically the Strait of Hormuz. You just said it, Will. The parties both agreed that the Strait of Hormuz should be opened. But it doesn't look like Xi Jinping is getting involved there. He's leaving this problem pretty much up to Washington, even though China is obviously suffering from the blockade as well. And with all that, we are seeing crude prices high again. Difficulties, of course, for the economies all across the world. And that's why, at least for today, investors are walking away once again.
You'll keep an eye on that, especially with the deal between Stellantis and Dongfeng Autos. Germany automakers have been in crisis mode for a while, and I'm sure that news is not boding well. But yet another Chinese firm is moving into the EU market. Lars, what can you tell us about that?
Yeah, that's right. We're talking about China's Xiaopeng, or Xpeng as it's called here, after German automakers basically lost the Chinese market to a newly developed auto sector there. Chinese brands are putting ever more effort into selling their products in Europe now, and Xpeng is actually taking it a step further even. They want to make cars here, and they're in talks with Volkswagen to take over one of their plants. That might be interesting for Volkswagen as they are currently trying to cut costs, and they said that they might have to close some plants anyway. Now, Xpeng isn't entirely sure, though, that a deal will happen because they say, and I quote, the Volkswagen plants are actually a bit old. So they're also considering maybe putting up a new plant from scratch. But we do know, of course, that that takes a while. It's a very complicated and often a very long process. So we've seen that last when Tesla built its gigafactory outside Berlin. So Volkswagen has excess capacity, and for Xpeng, just taking over a plant here might just be a lot faster.
So how is Volkswagen dealing with this? Are they seeing this as a chance or opportunity, or as more of a competition?
Both, actually. As a matter of fact, while Xpeng would obviously be in competition with Volkswagen, and that's not something Volkswagen currently needs here on his home turf, it's certainly also a chance for the company, and they are aware of that. 3 years ago, Volkswagen paid 700 million euros for a 5% stake in Xpeng, so they're actually sharing in that firm's success. Also, the companies already have a joint venture for one model that's currently being built in Beijing, and there's a second model coming. And here, both have stated that they did, in fact, learn from each other. Volkswagen took important lessons in technology from the Chinese partner, and Xpeng said they learned from Volkswagen how to scale things. So all in all, this could be helpful to Volkswagen maybe in the long run. The Chinese automakers have already shown that they're better suited to supply cars to the world of electric mobility. And, you know, German companies have gotten in on that game way too late. Now, with corporations like this, they might have a better chance of catching up.
Thank you, Lars. It's always good to talk to you.
Thank you, Will.
Now let's look at what's happening in other markets. Crypto, we see crypto has recovered from yesterday's battering. We see it in the green at 0.83% right now. Bitcoin is now back at 80,000 levels, $80,367, and Ethereum is still obviously taking the heat from oil prices, is down 0.37%, and XRP is in the red. Solana, XRP in the green, Solana in the red, BNB in the green. A lot of stocks are moving, moving. The volatility in the market definitely can see that, especially with oil movement and prices in that region and the sectors as well. So let's look at what's making headline in the crypto space. The Senate Bank Committee has voted Thursday to approve, mostly along party lines. We see that legislation will set the rules for the operation and oversight of digital asset markets, advancing a landmark bill the panel has been working on since last summer. Now, months of negotiations between Republicans and Democrats resulted in only two Democrats, Senate Ruben Callego of Arizona and Angela Alsbrook of Maryland, joining all Republicans in a 15-9 vote. Up next, Polish lawmakers adopted a bill on Friday regulating cryptocurrencies as scrutiny surrounding the collapse of the country's largest crypto exchange intensified and political disagreements over the oversight of the sector continued. And the legislation implements the European Union's markets in crypto assets regulation, that's the MiCA, which Poland is required to approve by July. Finally, the Bank of England is preparing to water down planned restrictions on stablecoins after pressure from the digital assets industry, with Deputy Governor Sarah Breeden saying that the central bank's initial proposals may have been overly conservative and that it is now reviewing alternative ways to manage risk posed by the sector. And that's how we end the crypto markets, and that's a wrap on Business Incorporated. I am Will Ibong. Bye for now.